Good morning, everybody. Today we're fortunate to have Tara from the Franchise Tax Board to go through the slides that you can see there, and to see about what's new and how what's going on with the law in California and the software and such is going to help us have a really good tax season this year. So, Tara, why don't you go ahead and introduce yourself and take it away.
All right, well, good morning, everyone. My name is Tara Swafford. I'm with the Franchise Tax Board. Just a little background on myself. I've been with Franchise Tax Board now for 13 plus years. I've been with the VITA team for 4 years. I think this is going to be my 5th season. So I'm really excited to be here with you guys and teach you about some California tax law. I'm only going to have my camera up just this morning, just so I could introduce myself, but I'll be turning it off for the presentation. All right, if we could go to the objectives slide. All right, so today we'll be covering California tax law updates, nonconformities, federal versus state, new law changes and other updates, California healthcare mandate, and then of course how we can assist you all with our FTB VITA support.
Way to proceed. Next slide.
Yep, please. All right, so for our California tax law updates. So as you can see here, we do follow suit with the IRS. Our original filing deadlines is April 18th of 2023. We do grant an automatic extension to file, and this is an automatic extension to file and not pay. So you must pay if you owe taxes by April 18th, 2023, or you could incur some penalties and interest. If you're traveling outside of the United States or residing outside of the United States, we grant an extension of June 15th, 2023, and also give that automatic extension to file of December 15th of 2023. With that being said, and what we were talking about earlier before we started, we now have heard that the IRS and FTB have granted certain counties in California due to the storms a 1-month extension to May 15th of 2023 to file and pay their taxes. Those certain counties, I could put them in the chat. I believe Orange County is affected by that. Same with Sacramento, where I am located currently. But yeah, we just heard that FTB is going to follow IRS and grant that 1-month extension for those affected by the storms.
That's good.
All right, next slide. So California also has personal exemption credits. So this is basically for anyone living inside of California, and those personal exemption tax credits are $140 for single or head of household, $280 for married filing joint or qualifying surviving spouse. And yes, we are following IRS with changing widower to qualifying surviving spouse. And then we also have $433 for each dependent. As you can see here, we do have a standard deduction that is much less than the federal standard deduction. California standard deductions are $5,202 for single, $10,404 for joint, head of household, and qualifying surviving spouse. So with that being said, there will be times when your taxpayer will take the standard deduction for IRS, but will itemize for California. And it's real easy to do in TaxSlayer. You just enter the information in the federal section, and TaxSlayer is pretty smart and will figure out that information for you, whether or not California will itemize or not. For the California Earned Income Tax Credit, you can see here that our maximum AGI has not changed. It is still $30,000, just like last year, but the amount of credit a taxpayer can receive has gone up slightly. So you could see here with the number of qualifying children, if a taxpayer has no children, they can receive up to $275. And for 3 or more qualifying children, they can receive $3,417. The investment income limit for EITC for federal and California have changed, and they've increased slightly. So federal changed theirs to $10,300 and California $4,389. So if they are above that amount in their investment income, then they will not qualify for EITC for either federal or California. So we have renter's tax credit here in California. The non-refundable credit has not changed. So that's still $60 for single, $120 for joint head of household, and qualifying surviving spouse. We do have those AGI limits down there, but if you're a returning volunteer, you just know that you have to select yes if they did rent, and TaxSlayer will figure out if they fall within that AGI limit or not. So make sure you ask your taxpayers if they rent, and if they rented for the full year, they could receive this non-refundable credit. So before we get into those non-conformity, does anybody have any questions before we continue?
Does the renter have to rent for the whole 12 months?
Roger, no, they could rent for any amount of months. I think it has to be at least 6 months to get it, but it is prorated. And if you look in our 5130, it has a breakdown on the number of months and the proration amount.
And is there an item in TaxSlayer? I'm just trying to remember from last year. I just remember it's been,
Oh, you're cutting out just a little bit. I didn't hear that last part. I see your screen is lit, but I don't hear anything.
okay.
Oh, I heard okay.
It's okay. I you can keep going.
Okay, okay. I kind of heard something about TaxSlayer, so I know I'm not sure about your site, but if they're a part-year resident or I think, sorry, not part-year resident, but if you go into the credit screen on the California section and actually go into renter's credit, I believe there's an area where you can mark how many months that they were renting. I just received my 2022 duck book. Is the information you're sharing consistent with the book? I believe so. I believe so. Sorry, I know that was a direct message, but it's easier just for me to tell everybody. All right, so non-conformities, unless we have any other questions. All right, so these are some examples of income that are not taxed by California, but are taxed by the IRS. So the first 3 bullets are automatic adjustments that are done by TaxSlayer automatically. So no extra information needs to be entered into TaxSlayer for it. But the bottom 2 do have some manual adjustments, and we'll go over those in the next couple slides. So the income that's not taxed by California is unemployment compensation and paid family leave, Social Security and railroad retirement benefits, state income tax refunds, and then those manual adjustments are interest income from U.S. Treasury bills, bonds, and territories, and then also California lottery winnings. So interest income from U.S. Treasury bills, bonds, or territories is one of those manual adjustments, and it's done on the federal section. So you would go to income, interest and dividends, interest and dividend income, interest income from 1099 INT, And you know that you have interest income from U.S. Treasury bills, bonds, or territories if your taxpayer has information in box 3 of their 1099 INT. And what you would do is still enter that information in box 3, and then you'd scroll down about halfway down the page and enter that same amount in the box labeled amount of interest on U.S. savings bonds and Treasury obligations you want subtracted from the state return. Once you enter a number into that, you'll have another drop down that asks what state you want that income subtracted from, and then you would select California. For California lottery winnings, again, this is another manual adjustment that you have to do in TaxSlayer. So this is actually done in the state section. So you would go to your state return, you would select subtractions from income, select California lottery winnings, and then enter the amount of winnings. So because California does not tax on California lottery winnings, we also don't allow the losses to be deductible. So alimony. So California still follows the old way IRS used to do this. Information changed in 2019 for divorce decrees that happened after 2019. And California is still the old way. So alimony received must be included as income on the California return. Alimony paid can be deducted, from income on the California return. So these is an automatic adjustment done by TaxSlayer as long as you enter the date of the divorce decree and the spouse's information. You may have to go into the state return to enter the social security number of the person receiving alimony. All right, so before we get to the new law changes and other updates, are there any questions?
I just popped the one, about the recent refund that a lot of us received. That's going to be that at this point, it seems to be taxable in the federal, right? But not for the state.
Yeah, we're actually going to get into that, the middle class
Okay.
tax refund.
Yeah. Yep.
Yeah, we'll get into that. I think I believe it's in this section here.
Okay.
Another question on the entering alimony, the social security number, do you have to enter both the sender and the receiver?
I believe you just have to put the receiver, because if someone's paying alimony, their social security number is already on their tax return.
Of course, that I should have thought of that.
Yep. All right, so a brand new credit that California has this year is the foster youth tax credit. This is where a taxpayer could receive $1,083 per individual, and this is refundable. The way a person can receive this is if they were in foster care placement while 13 years of age or older, and is between the ages of 18 to 25 by the end of the tax year. And they have to be eligible to claim California Earned Income Tax Credit in the taxable year of the credit. So they have to be below that AGI threshold of $30,000. And then, of course, all the other qualifications for CalEITC. So the Young Child Tax Credit, this is not a new credit, but we have expanded on it. So, and the credit amount has increased to $1,083. The information that changed is we now allow an individual with a qualifying child, so a child under the age of 6, who would otherwise have been allowed the CalEITC, except for the individual has earned income of $0 or less in the taxable year. So they can receive that $1,083 if they have a child under the age of 6 with $0 or less in the taxable year. This amount of credit is also not considered income for the purpose of receiving state and local benefits. So they won't have to worry about losing any government assistance. So everybody's favorite, the middle class tax refund. So this is a one-time payment to provide relief to Californians. So when are the payments being issued? So they've been issued from October all the way to now, January. I have heard rumors that we may still be sending some out in February. And how these payments are sent out. So if you would receive it by direct deposit if you filed and received a 2020 tax refund by direct deposit or on a debit card. I have heard of people who received direct deposit in 2020, but still receiving a debit card. And that's either maybe because they changed addresses or they changed bank account information.
So that's interesting. So people who receive it this year in 23, that'll go in their 23 income, and some people will have it on their 22 income.
That is
for federal?
correct. So I was going to wait to the next slide, but I could go into it. So
okay, sorry.
no, that's okay.
Yeah.
Everybody wants to know, right? So
Yeah.
I don't mind. So we have found out that California is going to send out 1099 miscellaneouses for anyone who received a middle class tax refund of $600 or more. So with that being said, it is taxable for federal, but is not taxable for California. And if you remember how we went into the gambling winnings and how we subtracted that income out, that's probably going to be the same way that you would subtract this middle class tax refund out of California when the information pulls up in TaxSlayer. And then also, because we're only issuing 1099s for $600 or more, you still want to ask your taxpayers if they received an amount below the $600, because that is still considered income and that should still be reported on their tax return. And you would report that information in other taxes. So in order to be eligible for this middle class tax refund, a taxpayer had to have filed a 2020 tax return by October 15th of 2021. So they had to have filed a timely return for their 2020 tax returns. They also will have to meet the California AGI limits, which we'll go over in the next 3 slides. They were not eligible to be claimed as a dependent in 2020 tax year and was a California resident for at least 6 months of the 2020 tax year, and is a California resident on the date the payment is issued. And then I kind of forgot, but like you were saying, if they receive this middle class tax refund in 2023, it's reportable on their 2023 tax return. If they received it in 2022, it's reportable on their 2022 tax return.
Oh, I have a question. Oh,
yeah.
So it's interesting, but it has to be I mean, I know a lot of people will have this as direct deposit. So if somebody was in California in 2020 and then they weren't here now, how would the California know not to send them something by direct deposit? I don't know. I could see somebody in another state getting a deposit when they're not a California resident anymore. And I don't know how they would call that back. Yeah.
I'm not exactly sure how they figured that out, but if they filed their 2021 tax return and they don't have a California address, that's one way, because we do share information with the IRS, back and forth. So if they filed with a different state address, then that would be one way that they would not receive it via direct deposit. But I'm not exactly sure of all the different ways.
Yeah, I mean, they could have filed their 21 return in April, in April, and then they moved out and got paid in October. Anyways, sorry.
Yep. And it could also be because if they receive W-2s from a different state too, there's a whole bunch of different ways that the government can track us.
Okay, good. Good. Not playing any games, but just if people just suddenly get this check where the thing's coming from, and know that they may not deserve it. But I guess that's for another day.
Yeah.
Okay. Should I just advance again?
Yep.
All right.
All right. So those AGI limits that I was talking about earlier. So I know with VITA, we generally stay with, lower income tax folks. So I'm just going to go over on each one of these slides, the ones that would, be more for VITA. So for married filing joint, that AGI limit was $150,000 or less. If they had a dependent, they would have received $1,050. And if they did not have a dependent, they would have received $700. And then if we go to the next slide, for head of household and qualifying surviving spouse, that AGI limit was the same, $150,000 or less. And if they had a dependent, would receive $700. And then if we go to the next one, for single or married filing separately, we have $75,000 or less. So different from head of household and married filing joint AGI limits. If they had a dependent, they would receive $700. And if they did not have a dependent, they would receive $350. I'm also going to post in the chat our webpage for the middle class tax refund that has a lot of good information on it, where they could go to ask questions. If they have issues with the debit card, there's all kinds of great information on there, as well as all the information that I just went over. So I'm going to post that website in chat for everyone.
Since there's been a lot of theft of the debit cards out of mailboxes, what if we have a client that got the 1099 miscellaneous that said they received $700, but they claim they have not received it? They never got a debit card and there was no direct deposit.
I believe that they would want to contact customer support with that information. And then I think, let me look on that website real quick. Yeah, so they would want to, there's two different phone numbers that they could contact. Let me put them in chat, and it's just directly off of our website. There you go. So they would want to contact one of those phone numbers and just ask the questions. And hopefully they'll be able to take care of them, but I don't know exactly what they do. I hope that helps, Roger.
What do we do? We'll be obligated to report the income, right?
I believe so, but that would be something more or less I think you would want to talk to your site coordinator about.
Okay.
You're right. I don't think we could ignore it. If it's on the form.
Yeah, because if not, they'll,
Yeah.
If you ignore it, they're gonna get like a tax return change from at least California, and probably IRS if the 1099 was issued.
You might consider entering the 1099 as published, but then do an adjustment to income for a negative amount and then explain money not received.
Yeah, that would be really up to your site coordinator of what you would want to do. Yes, I would definitely check with them before making any adjustments.
And it's only taxed at the federal level, so.
Yes, Roger. I think I did speak, you won't receive a tax return change for California. It would just be for IRS.
Exactly. Okay, thank you.
You're welcome. Are there any other questions about the middle class tax refund? All right, so next up is the California penalty abatement. So FTB grants a one-time penalty abatement for late filing or late payment at the request of the taxpayer. And this is either by phone or by mail. This is for taxable years on or after January 1st of 2022. And the abatement is available and issued only once in a lifetime. So taxpayers are eligible if they have not previously been required to file a California personal income tax return or received a California penalty abatement, filed all return and paid or entered into an installment agreement to pay all outstanding personal income tax liabilities. So they could just call our general tax line if they want to request this, or they could send it in by mail, and I'll put that address in chat as well. So for the child tax credit, if you are a returning volunteer, you know that it enhanced for 2021, where they got the advanced child tax credit. This has expired, so we're kind of reverting back to the old way for federal. So the credit now is $2,000 per child, but a refundable portion is only $1,500. The child must be under 17, and it's not available in advance and must be claimed on the tax return. So like I said, no more advanced child tax credit. So you don't have to worry about that in TaxSlayer anymore, which if you're a returning volunteer, know that's kind of a pain because of the different notices. But for California, we do not conform to this. We do not have this credit. For the earned income tax credit, it was enhanced for the 2021 tax year as well, and it has expired. So again, reverting back, and this is for federal. So the credit for 2022 is a maximum amount of credit for no children. It is reduced to $560, and that's down from $1,502 from last year. The qualifying age for taxpayers with no children changed from 18 and older to ages 25 and 65. So again, back to how it was prior to 2021. And then of course, the use of the 2019 earned income for calculating the credit is no longer allowed because that was just for the enhancement. And California does not conform. We have our own set of rules for earned income tax credit for the Cal or EITC. So we do not conform. So for charitable contributions, federal allowed people taking the standard deduction to deduct an additional $300 or $600 if married filing jointly for charitable contributions in 2021, but that has expired. So again, reverting back to how it was before 2021, taxpayers taking the standard deduction can no longer deduct the charitable contributions, and the deductions are only allowed on Schedule A. So they have to be itemizing in order to claim charitable contribution deductions. And California does conform. So the child independent care credit, of course, that one also was enhanced for 2021 and has expired again. So reverting back to what it was prior. So the credit decreased back to 35%, and the expenses also decreased back to $3,000 for one and $6,000 for two or more individuals. And the credit is no longer refundable. And California does conform to this. Educator expense deduction for federal, the annual limit increased to $300 or $600 if married to another eligible educator. And remember that each person can deduct up to $300. So if one had more than the other, make sure that you're only deducting $300 for each educator. And then California does not conform.
Does TaxSlayer take care of the non-conformance automatically?
Yes, except for the ones that we talked about earlier. So the interest income from U.S. Treasury bills, bonds, and territories, and California lottery winnings. And of course, the middle class tax refund. So everything else should be basically an automatic adjustment in TaxSlayer.
Okay, thank you.
You're welcome. Student loan forgiveness. For federal, they exclude the forgiven student loan amounts applicable to loans discharged from gross income from 2021 through 2025. And California is limited to specified discharges. And some of those discharges are for the death or total and permanent disability of a student, and also school closures. So that one may be a manual adjustment depending on the reason why their student loan amounts were discharged.
Is there an expectation? I'm just trying to go through all what you just said about all the changes. Is there kind of a general expectation that refunds will go down in California and taxes will go up? It seems like most of the changes are less taxpayer favorable. Or is there an expectation of FTB of how things are going to move?
So I don't know what the expectation is, but from everything that I've seen, I know refunds are going to go down a lot because mainly IRS increased a lot of credits for people to help out during, you know, the pandemic,
Right,
and
right.
everything. So I do see that most likely a lot of refunds are going to go down this year. They're not going to be as high.
Right. Yeah. And then some of the ones are like the deduction for charitable, right? California conforms, so maybe it'll be the same, but I guess it's kind of hard to tell. I guess we'll see it.
Yeah,
we'll see it when we do the returns, which way it's going to go.
Yeah, I really think that you'll probably see about the same refund amounts for California, but IRS
Yeah.
refunds are probably going to be a lot less than the last
Yep.
couple of years.
Yep. That's what I've heard too. Okay. Thank you.
You're welcome. Are there any questions before we get to the California healthcare mandate? All right, so everybody's favorite, the California healthcare mandate. So this is still in play. This started in January. If we go to the next slide, January of 2020, it was required that all California residents had minimum essential healthcare coverage. So that is including their dependents. On the next slide, if you did not have healthcare coverage, you would receive a penalty through your tax return. So it's either the flat amount penalty or the percentage of household income, whichever one is higher. So the flat amount penalty is increased from last year. That's $850 per adult, $425 per minor. And the percentage of household income is 2.5% of gross income amounts that exceed the filing threshold. So whatever one's higher. And cool thing about TaxSlayer, as long as we enter the information on the 3853, which we're going to go over, as long as you enter that information incorrectly, TaxSlayer will figure out the penalty amounts for them.
I don't know if you want to take that question on the California student loan forgiveness, or do you want to pick that one up later?
Yeah, I could go over that.
Yeah.
So that's for the death or total and permanent disability of the student or school closures. Those are the specified discharges for California.
Thank you.
No problem. So if you are a returning volunteer, this might be some great news for you. So the FTB 3853 health coverage exemptions and individual shared responsibility penalty form is the only form we have to worry about this year. The form 3849, the premium assistance subsidy form, is now obsolete because we no longer are providing subsidies. California is no longer providing subsidies, and that ended in 2021. So this is the only form we have to worry about this year. And
Yay.
yeah,
That was confusing.
it is very exciting for all of us that we only have one form to fill out because as you'll see, we're going to go through a walkthrough in TaxSlayer of how to enter the information for this form. But basically last year we had to double the work, right?
Yep.
Yeah.
Mhm.
So very exciting news. So the TaxSlayer walkthrough for this, it's going to be a whole lot of me talking and then, just showing the screenshots, but you're going to fill out this form through the state section. So you'd go to your California return, you'd hit that pencil or pen, and then we'd go to the next slide. And depending on how you answer the questions, because if you're a returning volunteer, you know that it was kind of a pain. Whenever you entered the California return, you'd have to answer the same questions over and over again. So depending on how you answer those questions, you may go directly to the healthcare forms, or you may have to go and select healthcare forms. But either way, you want to get to this page here. And we kind of mocked up last year's pages. So we're hoping that it stays the same, although we haven't seen it in TaxSlayer yet. So you would go to your healthcare shared responsibility tax, that form 3853 that I was talking about, the only form that needs to be filled out this year, and you would select begin. And if we go to the next slide, there we go. I know this is really small, so let me read it out to you. The first question it asks, did the taxpayer have full year minimum essential healthcare coverage for all members of the household? No, if your answer is yes, then form 3853 will be removed. So in this scenario, we want to show you how to fill it out. So of course our answer is no, because we want to fill out all the information on here. And then we kind of work our way down. So the next part you would go to is part 3 coverage exemptions, and then you would select begin. And then the next slide. So most common scenarios are going to be with individuals claimed on their federal return. So you can see here, depending on your situation, you would select to begin on either one of them. So either all household members were claimed on the federal return, or all household members were not claimed on the federal return. Again, this is the most common scenario. So we're going to select the ones that were claimed on the federal return and select begin. So on this page, we kind of have this weird button that doesn't really show up on any other pages. This button says add part 3 California coverage exemptions for household members claimed on the federal return. So remember this page, because depending on how many taxpayers you have on the federal return will determine how many times you have to click that button. So in our scenario, we technically would have to go here and select this button 3 times because we have 3 taxpayers on this example. So if you select the next slide, when you go into that button, you'll see that you have a drop down with all the individuals claimed on the federal return. And so you just, with me, I just start from the top and work my way down. So we'll start with John. And let me give you a little background on all 3 of these taxpayers. John Doe had full year healthcare coverage all year. Jane Doe had health coverage January through March, and then April, May, and June did not have healthcare coverage, but then she picked up healthcare coverage July through December. Jaden Doe had healthcare coverage for the first 6 months and then did not have coverage for the last 6 months. So on this page for John, you would go to the drop down for full year because he doesn't have any break in coverage. So you would select health coverage here for full year. And then for Jane and Jaden, you would go down And I know we couldn't fit them all on this slide, but it does list every month, so all 12 months. And then you would select either if they had healthcare coverage or if they had an exemption for that month. So for Jane Doe, you would select health coverage from January through March, and then also July through December. And then because Jane had 3 consecutive months of no coverage, she would qualify for the short coverage gap. So then you would select short coverage gap for April, May, and June. Jaden, you would select health coverage for January through June, and then don't select anything for July through December. And then once you enter all that information, you go back to the next slide. Go back to the form 3853, and then we're done with part 3. Now we have to go to shared responsibility payment, and then you would select begin. Again, in our scenario, this is based on individuals claimed on the federal return, but depending on your scenario is whatever begin button you would want to select. So for us, we're going to select the one for individuals claimed on the federal return, and we would select begin. And again, we have another one of these weird looking buttons that says add shared responsibility payment. And again, for our scenario, we'd have to make sure we come back to this page and hit it 3 times. When you do, again, you'll have that drop down. And if you work it from the top to the bottom, John, Jane, and then Jaden. If our taxpayer received an exemption through the marketplace, they would receive a certificate number. And then right below the drop down for the names, you can see there's 3 boxes. So depending on which taxpayer received the exemption from Covered California will determine where you would put that exemption number, that certificate number they received from Covered California. And then below those exemption certificate numbers, you'll see a list of all 12 months, and each month has a drop down of yes or no. And it does say on here, select the months below that you had health coverage or a qualified exemption. So for John, you would select yes for all 12 months. For Jane, you would also select yes for all 12 months because the 3 months that she didn't have coverage, she qualified for an exemption. And then for Jaden, you would select yes for the first 6 months and then no for the last 6 months. And once you do that, you're all done with the 3853. And what I like to do on the next slide, thank you, is I like to go and print my state return and make sure that I filled out the 3853 correctly. So you would want, I see a question not
Yes,
showing on screen.
it's Roger. I'm asking a question. Those exemption credit or certificate numbers 1, 2, and 3, do they correspond to John, Jane, and Jaden respectively?
That is correct.
Thank you.
So someone direct messaged me, said not showing on screen. I'm not exactly sure what you're referring to. Are you not seeing the slides on the screen? All right, I'll wait for a response. I'll
Yeah,
continue
I
while
can,
I'm
I
waiting.
can see them. I can see them.
Yeah, don't
Okay.
worry about that. Thank you.
Okay.
Sorry about that.
No problem. All right, so when you print out your return to double check this, you want to scroll almost all the way down to the bottom. That's where you're going to find the 3853 form, and then you want to go to part 3. So what we're showing right here. So you could see here, John Doe has a code Z in column A, that full year column. So code Z does mean health insurance. And then for Jane, you could see that she has Z in January, February, March, and then July through December. And then she also has a code C for April, May, and June. Spoiler alert, code C is for short coverage gap. And then Jaden has code Z January through June, and then a code X for July through December. So code Z and code X aren't on the list of codes, but you'll just have to remember that Z means health insurance, X means no health insurance. And if you want a list of all the codes, if we go to the next slide, you could find the codes on the 3853 instruction booklet. And this is what you'll see. It will tell you which code will show up for each exemption. So that's just another way you could double check your work. All right, so any questions on that healthcare mandate? I know it kind of seems a little bit of a lot of stuff to do, but it's actually pretty easy. And of course, we don't have to worry about that other form, so it makes it way more easy. All right, so then I'll go into the FTB VITA support. So how FTB's VITA team can support our volunteers and our site coordinators. So right now we have training videos on our website at www.ftb.ca.gov. If you just search for VITA, you will be able to find these YouTube training videos on every page of VITA. So whether you click on resources and training, whether you click on becoming a volunteer, you'll find a link to these YouTube videos. So we have a total of 13 videos on federal and state tax law. And then we have training videos. They're already out. You can view them now. And we go over everything. We even go over that healthcare mandate walkthrough that I just went through with you all. So if you wanted to brush up on anything, or if you had trouble sleeping at night, take a look at those videos. All right, so we also have a VITA hotline. This hotline, we, due to the nature of our job with the VITA team, we do not have access to taxpayer accounts. So what we can help you with is questions on California tax law, questions on TaxSlayer, questions on preparing returns. We could also verify payments made electronically and verify return statuses submitted electronically. So the reason why I say that we can't get into taxpayer accounts is because we would really like it if you do not give this phone number out that's on the next slide out to your taxpayers. This phone number is really just for our volunteers and site coordinators, so that way we could help you all out. We do have a small team, around 10 people. So if this number gets out to our taxpayers, there will be longer wait times for you all to get answers for your questions. So that phone number is 1-800-522-5665. And then we do have an email address. So I do kind of say, if you have like a really tough question, or you think that you might stump somebody that's on the phone, email us your question at volunteercoordinator@ftb.gov. And that way we could have a little bit of extra time to research your question and get you the correct answer the first time. And last but not least is our training evaluation. So if you guys can, please go and take this evaluation. Let me know how I did. We're always looking to, kind of better our training. So if you liked me, my name is Tara Swafford. And if you didn't like my presentation, my name is Noria Samimi, which is my lead. No, just kidding. But please let me know how I did. If you could think of anything that you would need extra instructions on, please let me know.
Hey, Tara, good morning.
Good morning, friend.
I'm Fred. I'm one of the coordinator for St. Killian. I really appreciate your presenting the Franchise Tax Board. I have one question. Would you be able to find out the publication or the forms that were requested from you guys have been sent to us?
You requested some forms to be mailed.
Yes, to our site. to St.
Um,
Killian. Do you know if that has been done or?
You know what, Fred, I'm not exactly sure. If you email volunteer coordinator that email address,
Yeah,
and then you could ask us there if your order's gone out or when we think it will go out.
all right, thank you. I have that email, so I just I can follow up through the other route. Thank you very much, Tara. Appreciate.
No
you-
problem. I would help you out, but I that's not one of my jobs, so I don't know
Not a
exactly where to
problem.
go.
Yeah, I have the point of contact, but I was just kind of asked the question just at least also thank you for having this presentation.
No
Appreciate it.
problem. Thank you for having me. Thank
Thank
you
you.
for having me. Thank you, Maria.
And John, still there?
Yeah. Do you want me to shut the recording off, Fred? Because you're going to be going to have something for just St.
Yeah, I
Killian?
just want to pass some information to
Okay.
our St. Killian
Okay,
volunteer.
let me just stop there quick. Tara, thank you for the presentation. So I guess we'll end it and I'll stop the recording.
No problem. And then,
Okay.
like I said, if you guys have any questions,